Big Brother, mainstream media, government cover-ups. You want answers? Well, so does he. Live from Austin, Texas, broadcasting worldwide, it's Alex Jones.
But going to Peter Schiff, the CEO of Euro Pacific Capital, joining us via video connection from his headquarters. Wow, we are really seeing things plunge. What is happening in your analysis right now?
Yeah, you know, first of all, Alex, the bad news is all of my predictions have not come true. I think a lot more of them are going to, which means it's going to get a lot worse. You know, this phony economy is unraveling, which is actually a good thing. The problem is the government won't let it happen because we can't really have a restructuring and a legitimate recovery until we allow the phony economy that the Fed and Congress have created to unravel. But they won't let it happen. So I think we're going to get a lot more money printing and a lot more regulating and a lot more spending, which is going to prolong this depression.
Well, sure. I mean, up until this point, you predicted the 08 situation. You predicted that it wouldn't help, and within 3 years, it would start imploding even faster. So what I'm saying is up to this point, you've called the ball game up to halftime. So tell us, what's coming next? I mean, they're announcing new wars they want to have to try to get us out of this. They're announcing
wars are the last thing we need, you know, for a number of reasons. Forget about the humanitarian aspect of it. You know, the financial aspect is we don't have the resources to fight a war. We can barely afford peace, although we don't actually have that either right now. But the real crisis is going to come when the world is fleeing the dollar, not embracing it. Right now, as bad as it is, the dollar is actually going up. Treasuries are going up. People are buying dollars in treasuries as they sell stocks. When the real crisis happens, they're going to be selling dollars in treasuries. That's the real crisis, because then the dollar plunges, then interest rates go up, and then prices go through the roof. And that is what's really going to turn this into a crisis, because it's going to be an inflationary depression.
Well, isn't this like a seesaw? Talking to Dr. Paul Craig Roberts, the father of Reaganomics, just about 3 months ago, he said, Alex, you could see a big sell-off of gold. It'll go up later even more as people run from the euro to the dollar. Then they'll run from the dollar to the euro. But overall, both the currencies in the long term or even medium term are going down. And I know you've talked about that there could be this run into treasuries for a time, but that's the sign that the circling of the toilet bowl is basically coming to its final conclusion.
Yeah, well, look, the Fed came out yesterday and didn't promise endless money printing. They just did this Operation Twist, which is actually going to backfire. The markets are going down, but I believe the Fed will eventually cave in. They will, you know, it's a game of chicken between the markets and the Fed, and the Fed is going to blink. The Fed is going to give the market what it craves. It's going to feed the addiction for cheap money, quantitative easing. It's coming, and when that happens, gold goes up and the dollar goes back down. But right now, maybe the market doesn't realize that that's coming, and you're getting a lot of liquidation as people who believed that there was a recovery. There were a lot of people who managed money who actually believed that the U.S. economy was getting better. I knew that was just an illusion, but most people didn't. Well, now that reality is rearing its ugly head, that's causing a lot of the people who invest money to have to, you know, change their portfolios around to take into account this new information. And so you're getting a lot of unwinding of trades that were based on a recovery that just is not happening.
So what's going to unfold then? I mean, clearly they're not going to take Ron Paul's advice. They're not going to take your advice. They're not going to take Dr. Paul Craig Roberts' advice. They're not going to take Bob Chapman's advice or Gerald Celente's advice or John Williams' advice. They're not going to take Rubini's advice. They're not going to take Rogers.
Rubini's advice is the exact opposite of mine. Remember, Rubini wants more stimulus. He wants more government.
No, you're right. And he's also said we weren't really in a recession for a while, but now he's kind of jumping over to my view. But my point is they're going ahead with their current program of more stimulus, more QE3. What is that going to do?
it's just going to do more harm. It's going to do more. This creates more inflation. You know, the key isn't to stimulate consumption or stimulate housing. The government's got it backwards. I mean, we stimulate. The reason we're in trouble is because we overstimulated those things in the first place. We need to reverse all that. We need the government to get out of the way so we can save and we can invest and we can produce and we can work our way back out of debt and repair the damage that bad monetary and fiscal policy has done to the economy. We're not going to repair the damage by breaking it more, but that's all they're doing. But I know they're going to continue with this because that's all they know. They are convinced that we need more spending, even though we're spending like crazy. They're convinced we need to go deeper into debt. Look, Bernanke thinks that the problem with the economy is that rates aren't low enough. I mean, they've never been this low. How can we get them much lower? The fact of the matter is low rates are part of the problem. They're not part of the solution.
Well, Peter, what about the two-tier system? Sure. What about the two-tier system, though? The big banks, the institutions, they get it at 0 or less than 0, basically free money. For the general public, though, they're paying high interest rates. I mean, isn't that why the big mega private banks, Goldman Sachs, JP Morgan, and others, are very happy with what's happening? I mean, this is a command control economy. Well,
they've been happy. They've gotten bailed out. And my feeling is if the Fed withholds the next round of QE, if we don't have QE3, we're going to have TARP 2. Because I think these major banks are about to fail again if the government doesn't rescue them. And the rescue is going to either have to take the form of QE or TARP. And, you know, maybe the public, as much as they don't like the QE, they probably dislike TARP even more. So I think that the government's is going to go the route of the money printing rather than the bailouts. Although in order to bail them out, they need the Fed to print money. So if we get TARP, we end up getting both. But, you know, I don't want Americans to have access to cheap credit to consume. And in a free market, they wouldn't. It's all the government subsidies that enable people to borrow money for consumption. I want people to save money and then buy things that they can afford. We need credit to go to businesses to make capital investments that can grow the economy and create jobs and that provide the means for paying off the debt. If you borrow money to invest, the investment returns will pay off your debt. If you borrow money to consume, you have no way of paying off the debt.
Peter Schiff joins us, the CEO of Euro Pacific Capital. Peter, there is a method to this madness in my view, but I want you to give us your take on it. Just like we saw in October and in the month before that, in September in 2008, when they wouldn't give them the TARP money, Paulson went into Congress and said there'll be blood in the streets, martial law, total collapse, and held people hostage. And when Congress wouldn't pass it, because they were getting 1,000-to-1 phone calls against it, as Barbara Boxer admitted, they went public and fear-mongered. Well, we've seen the heads of the IMF, the World Bank, the head of the European Central Bank, all come out yesterday and say, total collapse if you don't do QE3. And then Bernanke says, okay, I'll do QE3 with this twist scam.
Well, the twist ain't QE3 because remember, he's buying $400 billion of long term, but he's selling $400 billion of short term. So he's not actually expanding the balance sheet. He's just twisting it a little bit, but he's actually going to put the squeeze on the banks, which is going to backfire on Bernanke. Because see, remember what happens if we reduce interest rates so that people can refinance their mortgages and reduce their payments, that represents a loss to the banking sector because the banks own the mortgages and the banks are already in trouble. And if you take away their cash flow, they're going to be in bigger trouble. And so, you know, this is not going to work.
Do you think Bernanke's really doing this to try to make the big banks loan?
I think he's doing it out of desperation. He wants to do something, and so this is what he's doing because he doesn't want to be seen as doing nothing. You know, he's doing something. He's grasping for straws. Okay, so if the big banks do start loaning all these trillions, Peter, won't that accelerate inflation?
If what? If the big banks do start loaning all this money they've gorged on.
They are loaning the money. They're loaning it to the government. They're buying treasuries. You know, they're buying. You know, they're loaning it for home mortgages and student loans and all kinds of stuff. The money's just not sitting there. Unfortunately, you know, if the government wasn't borrowing all this money, there'd be more money available for business.
Sure. Look. Put it in layman's terms. The point I'm trying to get at here is we saw fear mongering to get new monetary policy that the system wanted 3.5 years ago. Now we're seeing the same fear-mongering. Clearly, all the heads of the big central banks coming out and talking about gloom and doom and total collapse and greatest crisis. They know that's going to kill the stock market. So normally, even if things are bad, they'll lie and say they're great. Why did they come out in the last 48 hours and scream bloody murder, thus precipitating the stock market plunge?
Well, I don't think that was their intention. I don't think that they said, hey, let's make the stock markets go down. They were probably surprised. I bet Ben Bernanke is very surprised at the way the market reacted to his announcement yesterday. I think he probably thought the markets were going to like it. So he's probably scratching his head right now trying to figure out how to undo the damage.
But but normally you get a Federal Reserve head or an IMF or World Bank head or European Central Bank head comes out and talks about total collapse. And I've got all these headlines here. They've been doing this the last 2 days. I'm no rocket scientist, Peter. That's going to make people not have confidence.
Well, I don't know if they're talking total collapse. Who's saying that?
Oh, there's a bunch of them here saying greatest crisis, world in danger zone, Zolik. They're talking about, worse than 08. I mean, the quotes
it's going to be worse than 08. But in many cases, they're probably sugarcoating it. I don't know if they even know how bad it is. But the real problem is that the monetary system of the world does not work because the dollar is the center of it. The dollar is the focal point of all these problems. See, the world is trying to continue to grow by selling products to America. But we're broke. We can't afford these products. And even though they keep lending us money, we still can't afford them because that's how broke we are. So the only way the global economy can heal is if it gets out of this dollar system where the dollar is allowed to sink and other currencies are allowed to rise, so that instead of the Chinese, for example, trying to produce goods for us, they produce goods for themselves. But meanwhile, you've got all these currency wars brewing now because of this dollar peg. Like you saw what happened in Brazil. They were upset because their currency was rising against the RMB, so they imposed tariffs, and then their currency tanked. But you've got all this global trade and currency wars because the current monetary system without gold, using the dollar instead of gold, does not work.
Okay, Peter, what about the Swiss then? What did their move a few weeks ago to lower the value of their currency do?
Yeah, more proof that it doesn't work. You have a race to the bottom now. The Swiss had a strong currency because they were doing it right. They had a vibrant economy. They didn't have government budget deficits. They had a trade surplus.
Sure.
They had a current account surplus. And then what they did is they decided to destroy their currency because it was going up against the euro. It's like, Europe was jumping off a bridge, and so Switzerland said, hey, let's jump off the same bridge. But this shows you it doesn't work. The reserve, you can't have a monetary system that forces people to be reckless and irresponsible.
Well, that's the globalist model, is lower everybody instead of building things up and get everybody dependent. So in simple information that lay folks can understand, what's going on in this crazy bond market? How have we know the U.S. is in deep trouble? Could the bonds be going up even though their yield is lower? And how does this unwind?
Well, it's going to unwind badly because, nobody who's buying, if you look at the yield on a 10-year bond at 1.7%, nobody who's buying that bond plans to hold it to maturity. No one wants to clip those coupons for 10 years. At some point, the people buying the bonds are going to want out. And the question is, who's going to be there to take the other side of the trade? The only one is going to be the Fed. And it's going to have to create massive inflation to buy up all these bonds when the bubble bursts. This is the problem. This is the mother of all bubbles. And when it bursts, interest rates go sky high. And then whatever problems we have now with our debts are going to be compounded because it's going to be so much more expensive to service them.
Okay, what would you do if you were the president, the Treasury Secretary, and the Congress all rolled in one? If you could wave a magic wand, what would you do to try to reverse the situation we're in?
If I had a magic wand, I'd probably have to go back in time because we'd have to reverse the policies from 20 or 30 years ago. That would be the thing we would do. But assuming I didn't have a magic wand, but I had powers, I had the power to, I was a king or something, and I can dictate what was going to be done. we would have to allow the economy to restructure. And what that means sound money. That means higher interest rates, substantially higher. That means we let all the banks that have to fail. We don't bail anybody out. We shrink government dramatically. We eliminate entire departments and agencies. We dramatically cut government spending. We try to reform our tax code so it doesn't punish work and entrepreneurs. We got to abolish all these rules and regulations that are unnecessarily not only diminishing our rights but running up the cost of doing business. We have to really unravel the entire social welfare monstrosity that has been built up over the years. That is the only solution that's going to work. And the problem is you're going to need a king to do that, because no politician is going to vote to do that. Because they're afraid that when they take away the benefits, they're not going to get reelected.
And instead, they're just going to keep running us down the same path and passing the buck. I want to do 5 more minutes with you, if you can, to end the show here. Peter Schiff joins us. And, of course, if you're watching on television via the web, you can also see his website there behind him. But we'll give you that when we come back.